In 2021, Coinbase went public. Coinbase opened up its entire business to the SEC. 2 years later, in 2023, the SEC sued Coinbase. WTF? You said we're good to go. And now you're saying this same business model is illegal. Stablecoins are just so much better than the status quo. I suspect that we'll see just a huge ramp up in not just Bitcoin, but Sol, XRP, other assets moving on to Ethereum. Again, we think there's going to be millions of blockchains.
Meet Sam McIngvale, Head of Products at OP Labs and former General Manager of Coinbase Custody. In this episode, you'll learn why Optimism is the largest Layer 2 solution with over 70% of all the activity being done through OP, why OP Stack is being used to build Base, and why OP Stack is partnered with large Web2 enterprises like Robinhood and Coinbase. Sam has been at the forefront of the rise of Coinbase and explains why he thinks that Optimism is the next big thing for Ethereum. What separates Optimism from the other Layer 2s that are out there?
One of the things that's most important to us every single day is just supporting our existing partners.
How are we going to onboard the next billion or 2 billion users within Web3?
I have a very unsatisfied answer here.
Welcome to the show, Sam. I'm happy to have you on in a very exciting period where the crypto markets and Web3 starts to understand that there is more outside of Bitcoin, which is Ethereum. And in that regard, what is for you one of the most exciting things or news items you've seen in the past few weeks?
Thanks, Michael. Happy to be here. For me, the last few weeks, maybe the last few months, has really been about, I think very clearly there's something happening with fintechs and maybe enterprises more broadly, and crypto adoption, and specifically Ethereum adoption. And so I think if we're looking for a very tangible moment here, Robinhood stock tokens and Robinhood chain would probably be like a recent moment that speaks to this trend. But those products don't come together overnight. They've definitely been in process for some time. And I think if we look back over 2025 and ask what's different, what's allowing these enterprises to come on chain right now, the most obvious thing to me is we can point to the change in administration in the US. I think very clearly that is giving better guidance, clear rules of the road for enterprises and fintechs to come on chain. And if we're looking for something very specific, we can look to the Genius Act passing last week. So we have this convergence where, rules of engagement are changing, and that's leading to enterprise. And I think fintechs is a vanguard amongst them, taking advantage of those clear rules and moving their products on chain.
I know I've been to ETC where Robbie, you did the big sort of Apple presentation where they launched the tokenized stocks. How are you receiving that news? Was it like completely coming out of the blue, or did you knew already that it was going to come?
I think, like I was saying, a lot of these things take a good amount of time and investment. I think Robinhood has been thinking about this strategy. I expect Robinhood has been thinking about this strategy for many, many months, probably going back into 2024, even beyond that. And so definitely not surprised to see the announcement, and if anything, encouraged. Robinhood has been a harbinger of changes in finance, since it was founded. It has really forced so many changes on the brokerage and broader financial industry. So for us, operating infrastructure on top of Ethereum, but in crypto more broadly, we think this is just the start of a trend of many, many more fintech specifically, but then enterprises more broadly, payments companies, financial institutions, et cetera, very likely moving on chain. And so we view it as incredibly exciting.
I think it is very exciting. And I've also checked your entire journey in crypto, which has been very interesting as you've been going through multiple entities. And prior to this, you've been the head of product at Coinbase Custody. And I wanted to ask you, like, Coinbase and the takeover of Deribit and recently the IPOs, they are taking over the markets in such a way that there is a lot of focus on crypto enterprises that are being listed on regular exchanges or as regular stocks. How do you see that happening, and the amount of Treasury companies are coming in? Now we see recently Tom Lee building an Ethereum Treasury company. What is your thesis on that part?
I joined Coinbase in the very beginning of 2018, and I got to was very lucky. I got to help build out Coinbase Custody and then Coinbase Prime, and really got to be a part of bringing the first wave of institutions into sort of the crypto ecosystem and really helping them get exposure to crypto assets very early on. A reflection over that time is that there just haven't been great opportunities for public market investors to get access to crypto more generally. Just thinking about spot Bitcoin and Ethereum ETFs, they are 18 and 12 months old, respectively. They have not been around that long. There hasn't been a lot of ways for just the generic public market investor to get access to crypto. And what I think we're seeing right now is there's been this trend is probably in response to a lot of pent up demand from that public market investor to find ways to invest in crypto. And Coinbase, I think, is probably seen as a broad index on exposure to the crypto space. But a lot of these treasury companies, follow on and offer leveraged exposure to whatever specific asset they're operating as a treasury for. And clearly there's demand for that. So I expect we'll very likely continue to see this trend accelerate in the next couple months.
I think it's funny. I mean, Sater has provided a standard for Bitcoin treasury companies, and there are so many copycats. However, it's very risky to invest in such a treasury company when you don't clearly understand the depth or how they are issuing it. But it's good to see the hype being back into the markets. And one of the things, you have been having such a pretty long journey in crypto. What I wanted to ask is, what brought you into the blockchain ecosystem, and why did you make the switch from an enterprise like Coinbase going into Optimism or OP Labs?
I got to grow up studying computers. I studied computer science. I was a software engineer for many years, both just for fun as a hobbyist in high school and then in college. And then professionally, I wrote code for a couple of years, working for a trading firm in Chicago. Um, and blockchain to me was really this awesome convergence of computer science and just computers broadly and like a lot of those trends, cryptography, et cetera, and finance. And so it was just really a way to combine these two fields that I felt like I had some depth in, but was still very nascent at the time when I joined back in 2017, 2018. So that was what was exciting for me. Um, Today, in some sense, I've kind of gotten to come full circle at Optimism. I worked at an equities clearing custodian back from 2012 to 2017, and we were actually the custody platform that Robinhood first launched on. And so I got to help support their business literally starting in 2012 before they were even launched. And now, we're building blockchain infrastructure that Robinhood and many other fintechs are coming on board to today. And so for me, Coinbase was awesome. Such an incredible place to learn, such an incredible place to have leverage to bring brands like Robinhood and other big institutions on chain. Now we kind of get to get into the guts of the protocol at Optimism and really figure out how to fine tune that infrastructure for what those folks need, and again accelerate their adoption on chain.
Well, we're going to talk about that for quite a while, and I think it's even more complex to run a tech company in the sense of OP Labs building tech for developers and users than having Coinbase. But I'm sure that we're going to talk about it later. First, all of a sudden we see Ethereum waking up in such a vocal, vital way where there is so much inflow in the Ethereum ETF. What's happening? Why is this taking place? We touched upon the bills for quite a little bit, but why is that relevant, and why is it right now during the summer that's usually a really calm period that Ethereum decides, hey, we're here?
I have a very unsatisfying answer here. My belief, having been in the crypto space for a while now, is that narrative follows price. And if we just look at Ethereum's price action recently, I think it's up 55% in the last month. It's up something like 130, 140% in the last 3 months. That is price action that's going to get anybody excited and get a lot of people talking about what's going on. My perspective is that the things that are in place that are contributing to this trend are structural. They have been in place for some time. The Ethereum ETFs are spot ETFs, are a year old. And it just takes a lot of time for new financial products to find their way into the hands of institutional investors, retail investors, getting activated on various platforms, et cetera. And so I think it was natural to expect that it would take some amount of time before sort of the floodgates were opened and there was truly wide open access to these instruments. I don't think there is something necessarily that has happened in the last 3 months that is changing Ethereum's position or really contributing to these flows. I think this has been a wave that's been in progress for some time. But if we are looking for a recent news event, I think we do have to look at, the passing of the Genius Act last week. Um, Ethereum dominates stablecoin market share. I think something like 55 to 60% of all stablecoins are on Ethereum L1. And so if you think that the Genius bill is going to contribute to an acceleration in stablecoins, massive growth in stablecoin market cap, it feels very obvious to look at Ethereum and say a lot of this growth is going to accrue here just because it already has dominant position. And so that's obviously going to lead to more TVL, more activity, just growth on Ethereum broadly, and so that could certainly be contributing to price here in the short term.
It's interesting. You mentioned that narrative follows price, and I think we run a venture capital. Now price goes up, and all of a sudden the amount of investments are going parabolic within like all these startups. As all of a sudden it makes sense again. But yeah, the Genius Bill has been approved. Also, the Clarity Act is passed in the House. How relevant is that compared to the Genius Bill?
I think incredibly relevant, in some ways, probably more relevant, or maybe more exciting to large enterprises like Coinbase, and I think folks that might follow them on chain. I can give an example here. In 2021, Coinbase went public. And part of that process is Coinbase opened up its entire business to the SEC, and the SEC took a long, arduous look at Coinbase's business model, all of its activities, and said, you're good to go public. 2 years later, in 2023, the SEC sued Coinbase for operating an unregistered securities exchange. And while I wasn't at Coinbase when this happened, I can imagine the perspective inside was a bit of like, WTF, you guys took this long, arduous look at our business model. You said we're good to go. And now you're saying this same business model is illegal. Like, how is this possible? How are you able to, on the one hand, give us the thumbs up and then 2 years later sue us? And the reason for that is there was no clear guidelines for how this should work. It was all open into interpretation. And so the SEC in 2021 interpreted Coinbase's business model a certain way, said you're good to go. In 2023, they interpret it differently. And so I think if you are a really, really large enterprise, let's pick on JP Morgan for a second, and you're saying crypto is still nascent but growing, it's going to be a very small part of my business. Why should I come into this space when I know I'm sort of like subject to the capriciousness of the SEC, where they might say I can come in today and operate and then 2 years later sue me? That's just not worth it for a really, really large business to get into. And so what clarity in particular for market participants gives is those very clear rules of the road. That example cannot happen anymore, assuming you're following, the bills, the laws as they are prescribed. And so I think it is that specific shift that now lets many, many large enterprises that are going to be, the second wave of adopters anyway of a new technology get comfortable coming on chain.
There's one thing though. Usually, when you have a framework, in a sense, like in Europe, you have MyCar. In the US, you have the Clarity Act and the Genius Bill. But when there is a certain framework that you need to be compliant to it, it usually kills the amount of innovation, but it drives adoption. How are we going to keep the innovation going within the space?
It's a great question. In some ways, I think and I hope that these bills will accelerate innovation, at least in the US. And I can say this specifically working at Optimism. I think many crypto companies have had to like very awkwardly contort themselves to what they expect are the interpretations, or how, various regulators are thinking about crypto at the time. And so an example of this is Optimism is comprised of, multiple companies. Many of our employees are specifically outside the US. And that just leads to a lot of inefficiencies that I think actually like is a drag on innovation. And so if, at least speaking from someone just inside the US as an example, real quick, my hope is that very clear rules of the road can actually accelerate VC investment, can actually accelerate, small teams coming together and getting to run fast at problems versus having to spend most of their time getting started working with lawyers, setting up intricate, corporate structures and governance structures to just allow them to operate. We get to just wipe that slate, not completely clean, but mostly clean. And while we might not love all the rules as they are prescribed, in Clarity, for example, at least there are rules. And so there's no, again, what do we do in this case? What do we do in that case? So my hope is that in the short term, it can absolutely contribute to innovation. And I think adoption long term always contributes to innovation. The more adoption we have on chain, the more folks are going to come onto blockchains to build more things for that distribution for the folks that are there, be them retail, be them enterprises, et cetera. Um, so I'm very excited for that. I hope it'll lead to a lot more innovation.
I think you're right. I think if you're a small team, there are basically two ways of moving forward. Either you move out and get to a country that is very easy to build upon. Like for instance, Deribit started in the Netherlands, but then we had some like regulatory frameworks and they left. And we all know what happened afterwards. So that is an example of probably not doing it the right way as a government. Secondly, I think you can also build projects on top of, for instance, OP as a white label and just use the framework that's being designed within the Web3 space. But that's for a little bit later. First, what I wanted to tackle before we get into optimism is there's such a big interest from fintechs and exchanges getting into Web3. And they all seem to be interested to be using Ethereum. And there's a big gap between the, I think, interest or like incentive for people to invest into Ethereum. It has been lagging behind, but there's such a high interest from the institutions and enterprises to work on ETH. Why is ETH in particular the one to work on, and how is that going to benefit optimism?
Yeah, fun question. First, I just want to validate this trend. We are seeing and hearing a ton of interest from fintechs, payments companies, financial institutions broadly, and really at that sort of enterprise level, the biggest companies in those spaces. And we view our job going forward as to help those folks come on chain as quickly and efficiently as they can. We want to get them all on chain. That doesn't mean they're all going to run chains. But we sit at a really unique spot, sort of at the bottom of the stack, where we get to look up and see all the various solutions that folks put together to service these folks. And so, one, we have just a lot of institutional knowledge there. We're also able to help galvanize, sets of partners to help those folks move on chain. And so, we hope to be a really trusted partner and just a big part of this wave of those folks coming on chain. Why Ethereum for enterprises? I think the simplest answer is it's Lindy, it's battle tested, it's been around for a while. There are many institutions already building on top of it. And that is not to say that Solana or any other blockchain is not those things. It's just objectively the fact that Ethereum has built up more lendiness because it's been around longer. It has been doing these things longer. Its stablecoin market cap, for example, if you're just happen to look around and say, where should I deploy my stablecoin? Well, the most are on Ethereum. So there's a lot of just very simple facts that lead these large enterprises to look at Ethereum and say, this is clearly safe. It's clearly going to work for my needs. For Optimism specifically, we can actually make very similar claims. We're very fortunate to be able to make very similar claims. A couple of years back, Coinbase looked around at all the various options it had to launch Base, its blockchain, and they chose the OP stack. And since then, they've demonstrated incredible growth and scale on top of the OP stack. And I can say firsthand, Coinbase engineering, security in particular, these functions there are second to none in our industry. And so it's been a huge vote of confidence for the OP stack, for Optimism generally, to have Base and Coinbase building on top of it. And again, that's something that we think many other enterprises will look to and follow on.
It's interesting as also from the investor angle, it is in the previous cycle or in general, the thesis is new projects yield higher returns because they provide solutions for all the problems. Now it starts to be, hey, if you survive multiple bear markets and you continue to build, it's interesting to have an allocation to. You see it with Aave, for instance, Ether itself. I think Chainlink is also one of those core ones. And that's a different angle than just buying any token that is providing a solution, so to say, for a problem that might not even exist anymore. But if we talk about optimism, can you tell us more what Optimism does in terms of the OP stack and what OP Labs is?
Yeah, absolutely. And feel free to press more. I'll start high level and we can get, progressively deeper as we go.
Sure.
Very simply, Optimism was founded to scale Ethereum. We provide open source technology, what we call the OP stack, which is just a framework to help companies, brands, products, etc., scale and launch their own fast, secure crypto infrastructure. Saying this more simply, like the OP stack is a framework to run a blockchain. Specifically, those blockchains are L2s on top of Ethereum because we think there's many benefits to that model, and we think it can scale to meet the needs of many different types of folks that want to run blockchains. OP Labs is one of many companies building the OP stack. We're about 100 people, mostly engineering product, and we're aggressively focused on the protocol itself. How do we build the best crypto infrastructure for anyone coming on chain? And looking forward, we're very focused on enterprises generally. We want to make sure that this is the product they need to move their existing products on chain and hopefully run their own infrastructure in the future.
How I think Optimism is around for some years now, which means that in the time in between, Ethereum has changed a lot. In a sense, with Bactra and all the steps forward, that it reduced the gas fees significantly. So I can tell that a lot of people would probably ask right now is, do we still need a layer 2 on top of Ethereum when the gas fees are reduced? And if so, why?
I think it's a great question. I think we can think of this in two ways. One angle we can take on this is, what does it take to bring the next 100 million billion users on chain? What are the expectations they have if they're going to interact with blockchain applications? And the second is like, what does the future of distributed computing, blockchain computing look like? Let's take the first lens here to start. Ethereum has scaled its gas or its sort of throughput. Lately, gas fees are down considerably from sort of the mania we saw in 2020, 2019, et cetera. But it's still very slow. Slot times 12 seconds. I think one of the simplest things users think about when they use apps is they expect something instant. They expect something right now. And so one very simple way I think about L2s versus L1 is L2s give the possibility for the UX that users need today. If I pick up the base app, which Coinbase launched last week, and I start using it, there's no delay. Everything in that app is instant. You don't necessarily even know that there is a blockchain on the back end. And I mean, I think we all agree that, with some version of the future, that should be the case. And so I think today where Ethereum is likely lagging is sort of like, if we're going to build new mobile apps, for example, that are going to be on chain, the UX that's needed for that probably is going to be better on L2s than L1. So that's one way to think of, why L2s. Another is just, what is the future of computing? And with any computing trend, I mean, we sort of just at some point go vertical where we need more and more and more and more resources to meet the demand of everyone that is consuming, whatever that computing trend is. And we think of this exactly the same way at Optimism. We don't think, there is going to be one chain. We think there will be millions, I don't know, maybe many more chains at some point in the future. And obviously chain abstraction and interop are parts of this so that folks don't know, what blockchain they're necessarily on or how many blockchains there are, supporting their app. But it seems unlikely to us that, there will be single chains, just like there are not single servers that service apps today. And so another reason for layer 2s is it gives us a way to sort of horizontally scale this distributed computing infrastructure that is blockchains in the same way that, AWS allows you to horizontally scale the number of servers or resources you need for your internet app today.
I think that's a very important part, but I think the second thing is also, I haven't checked the gas fees, so this is just coming off top of my mind. But I think the variance on gas fees is still quite high, or is it significantly lower at this point?
I think if we take Base for an example, I'm not absolutely certain of this, but in general, like my understanding, just casually checking prices there and work doing stuff on Base pretty much every day, it has been under a cent for all of 2025.
Yeah.
And so there is some variance where it's hopping around between a tenth of a cent and 9/10 of a cent, et cetera. But we are at a price point where that feels pretty de minimis to most folks. And while I do think there's still a lot of UX improvements needed to bring the world on chain, that's a price where you can imagine apps paying for gas for their users because it is so cheap. like saying that another way, how different is the cost of like your AWS infrastructure versus the cost of your blockchain infrastructure if gas is sustainably, sub-second or sub-cent? Our goal is to make that 10x cheaper. We would like to be, sub a tenth of a cent, and on and on. That brings up new problems that we have to deal with as we continue to scale blockchains, but that's very clearly the trend.
I think it's either the variance in terms of like the costs of having the transaction go through, but then also the latency, which you discussed, is also very important. Maybe even more important, especially let's say you're a trader and you're using DEXs and you have a longer latency using ETH or whatever. You just don't want to have that. And I think that's not really relevant for retail investors, but for institutional parties that are using an app that want to build and want to have instant settlement, it's super relevant. And that's why I think we need layer twos. But then just a personal question. How difficult is it to build like a blockchain for developers to understand what you're doing? And then on top of that, for users to understand what you're doing?
It's quite difficult. We have a really incredible, large, growing engineering team that takes care of this. It's difficult for a whole host of reasons. Blockchains never get to turn off. They have to be like their uptime is 100% basically is sort of like the standard and the expectation. And those are very hard computing problems. Web2 companies go to great lengths to sort of obfuscate that under the hood, they are constantly spinning up, spinning down servers, adding more resources, scaling them back, restarting, those resources, et cetera. None of that really gets to happen with a blockchain. And so that's a whole host of engineering problems that's quite difficult. And not only that, you have to maintain, the whole point of a blockchain is to maintain history going back forever. You can always recreate what's happened. And so having to sort of persist that state forever, and make sure it's forward compatible with everything you do is another big challenge. Um, at the end of the day, we think that blockchains offer, apps and users some really neat advantages over just traditional computing infrastructure. This is why we all believe sort of in this trend, and that developers in particular are willing to put up with some amount of friction there to build. But ultimately, we expect the trend, I think, is in this direction anyway. Building on top of blockchain should be as easy as building on top of AWS or building on top of, any sort of like Stripe, for example, as a big Web2 infrastructure provider. We're certainly not there, but we need to both, scale the protocol and make it work in the ways I described, and then meet developers and users where they are to give developers the best developer experience they can, something that's very intuitive for them to move to Web 2 to Web 3, and then give users experiences that feel like whether I'm in Uber or I'm in the base app, that experience that I feel and interact with is basically identical.
That was like my follow-up question, which is for developers, there are so many options out there. Like there are two questions that I wanted to ask, but the first one is, how are you supporting developers to come to Optimism? As in, usually you can get grants for like tasks to do or build projects on top of your chain. So that was just the first question that I wanted to ask, because I think that ultimately, from your standpoint, I think it's not the end user that you want to target. It's more the developers, because they build something that the end user don't know that they are using. And then you get both of the parties, right?
Yeah, maybe saying that slightly differently. Developers give us the most leverage to attract,
Fair enough,
users.
yeah.
If we knew the killer app to go build on the Superchain, we would do it. We're infrastructure folks. We don't. So we try to give, developers the tools and the resources they need to build there. And yeah, you're absolutely right. Anyone who's looking to build on chain, head over to optimism.io. You can find a plethora of ways that we want to support developers. We can do this directly through grants, where you can come just apply for a grant, and we will fund many different ideas for folks to come build in the Superchain. We also do this through a program that we call retro funding, which is where we're constantly trying to incentivize certain public goods, applications, DevX tools, etc. And as we see those tools come into the Superchain and have success, we will, offer sort of retroactive looking grants to those folks to help sustain their business models going forward. And we might get into this in a minute, but I can talk about, sort of the flywheel that we envision here for how, chains contribute revenue, and that revenue comes back to folks building the super chain to accelerate our growth.
I want to ask you that in a few minutes. But first, I think I would like to tackle the entire sort of idea that we don't need as many layer twos as that we have. Like earlier this year, it was almost weekly that a new layer two got listed on top of like Binance or whatever exchange at a valuation that most people were thinking like, should this be worth the valuation that it is? Well, the question is, do we need so many layer twos? And if the answer is in the middle, what separates Optimism from the other layer twos that are out there?
Our very simple belief is that as we move forward 5, 10 years, 15 years, and crypto as sort of a technological force or just, pattern, etc., um, there's going to be millions of blockchains. And a lot of those will be layer twos. And so maybe 80% are layer twos. I'm not exactly sure, but there's going to be a lot. And so why do we believe this? Um, let's take valuations of layer twos sort of aside for a second. But no one looks at an app on their phone. I'll continue to use Uber as an example and says, we don't need more servers to run Uber. Like that is just a nonsensical statement. You and I have no idea how many servers or AWS resources it takes to operate Uber, nor do we care, right? We just want Uber, the app, to work. And I think similarly, our view is that there's just blockchains are a flavor of computing infrastructure, and there will be more or less blockchains in the future based on the features that that computing infrastructure provides and demand for the services built on top of them. The reason we work in the space is we think demand for the services built on top of blockchains is going to continuously explode, and that is going to require more block space over time, which will lead to just many, many, many more blockchains. Um, Hayden Adams has an analogy that he uses blockchains are servers. And so he says, I invite people to not think about blockchains as like standalone entities that maybe need to be valued or considered next to each other, but just think of them as servers that we are plugging in to build distributed apps on top of. And in that vein, there's probably going to be many, many more servers in the future as a billion people come and start interacting with more, on-chain apps. How do we try to differentiate the OP stack? We do this in a number of ways. First and foremost, I'd say one of the things that's most important to us every single day is just supporting our existing partners. Base, WorldChain, Unichain, Sonium, Inc., Celo. These are some of the biggest chains in crypto, and they all have really bespoke needs for how they need to continue to scale and meet their customers' needs. We partner with them every day to make them better and help them scale, help them meet their customers' needs. Second, we want the OP stack to be the best on-chain UX in crypto. Again, we think this is really critical to bringing the next wave of users on-chain because they have certain expectations for how they're going to interact with various applications. So we work hard every day to make sure apps on Base, OP Mainnet, WorldChain have the best UX possible. Solana calls this IBRL, increased bandwidth, reduced latency. We stole a statement from Jesse and Brian Armstrong over at Coinbase, sub-second, sub-cent. We want every transaction to be effectively instant. Sub-second, I think, doesn't even get it anymore. And sub-cent, similarly, at this point, we're probably sub-tenth of a cent. That is just a continuous thread of engineering work to make that happen. It's also the tooling to give developers, what they need to make all of their interactions the best they can be for their users. So, a couple years ago, I think most, on-chain interactions were us just, mashing approve in MetaMask. There was a single thing happening. Now apps bundle many transactions together. Some of those transactions are, cross-chain. We need good tooling and toolkits for developers to make that happen, to just, build more and more intricate experiences for their users. Finally, we're very excited about this enterprise wave that we've been talking about. We want the OP stack to be the most trusted and scalable and the most customizable and sovereign blockchain stack in the world. And so we can get into some details there, but we work hard every day to make sure we are demonstrating, those properties in our product and through our partners. And we think that's going to be critical for this next wave of enterprise adoption.
Well, if we talk about that, how active is Optimism in the entire layer 2 ecosystem, and what are some of the partners that you're currently working with?
Yeah, great question. Today, I think the Superchain represents something like 65% of all layer 2 transactions. So that's sort of like rough layer 2 market share. If you look at that across all of crypto, it's much, much less. Because you have blockchains like Tron and Solana that do lots and lots and lots of transactions. But we're very proud to have dominant market share, sort of amongst the L2 space. That's really led by some of the marquee partners I mentioned a second ago, but Base, WorldChain, Inc., Unichain, Sonium, Celo, OP Mainnet. These are some of the largest L2s in the space by any objective metric. And again, all sort of have unique approaches to how they want to scale their chain, their ecosystem, and meet their users, where they are. And so for each of those, we are very active in helping, whatever the specific strategy is to help those chains and our partners be successful, go win there. Final thought here is long term, again, we think there's going to be millions of blockchains. What's absolutely critical there is that these blockchains can talk to each other, just like servers, today can talk to each other. And as we know, that is just not possible today, or it is, quite burdensome. It's slow to go from chain to chain. It is annoying to keep track of where your assets are and move them. And so we are shipping a version of we call sort of native or protocol level interop, something that goes very deep into the OP stack to allow these chains to talk to each other. And we think that is a really key piece of infrastructure, or just a key feature needed to enable, the proliferation of L2s. What we don't want is sort of the list of blockchains in MetaMask or Uniswap or whatever to keep growing, because that's just too much overhead, both for developers and users to deal with. And so we think Interop is just really key to continuing to scale blockchain technology.
I mean, for people that are listening, back in the day, if you wanted to swap or bridge something, you had to go to a website, click like 15 buttons on MetaMask to approve, and then pay an enormous fee, and then you could get the tokens, hopefully, to the other chain. It's getting way better at this point, but still it's not smooth at all. And I think the most interesting one is, when are we actually able to move Bitcoin towards EVM chains? I think that's one of the biggest sort of holy grails to unlock, like the amount of liquidity that can move around. How do you see that?
I think the way that's most likely to happen, and the way that is happening right now, would be examples like CBBTC and KBTC from Coinbase and Kraken, respectively. Huge amounts of Bitcoin, sit inside Coinbase, inside Kraken, inside other exchanges, and it's for the most part idle. Coinbase has to invest a ton of money to keep it safe, and obviously that's their job. That's why people trust them. That's why people use them. But that Bitcoin sits there and is basically just a cost of Bitcoin, and it's completely idle for the folks that own it. Moving that on chain in the form of CBBTC is super quick. Everyone trusts Coinbase, trusts their security to make sure that that Bitcoin is secure and is fully backed. And then it's on, Base. It can move around. It can participate in DeFi, et cetera. And so CBBTC, I forget exactly how old it is, maybe a year or so, but we're really seeing an uptick now with Bitcoin-backed loans on Base. We expect to see many other folks follow suit, where they take, assets that their customers hold in some sort of centralized entity, move that on chain, and then make it productive for their users. And so I suspect that we'll see just a huge ramp up in not just Bitcoin, but, for example, Sol, XRP, other assets moving on to Ethereum via entities like Coinbase, Kraken, et cetera.
If we talk about like Coinbase, for instance, or Kraken, or any of the other partners that you're working with, they, for instance, Robinhood has launched on Arbitrum, the tokenized stocks. What are the core principles that Optimism tries to communicate to their partners that they stand for if they partner up with such a big entity?
Yeah, great question. There's a couple that I'll run through real quick. Um, One way we've built the OP stack, and really I'd argue like built Optimism over the last couple of years, is, and this has been our mission. Our mission has been to scale Ethereum. One way we've sort of internalized that is we want to be minimally different from Ethereum. And you see this in our branding and vibes, but it manifests more like meaningfully in actually our code base. We think a lot about making the OP stack minimally different from Ethereum. And one way we think about this is just literal lines of code, like how different is this code base from Ethereum? And oftentimes in the absence of other priorities, we will work hard to minimize that. This has a number of benefits. One, it means anything that works on Ethereum is just going to work, on an OP Stack L2. But it also means when something like Pectra ships, we can adopt it right away. So we activated Pectra across the Superchain within about 24 hours of Pectra activating on L1. And so that's been one way we've tried to differentiate ourselves. We want to be very Ethereum aligned because it has this lendiness, it has this sort of benefit of already brought a lot of institutions on chain. So that's one thought. Second is we think the most scale comes from the biggest brands. Coinbase has massive distribution and assets that they can move on chain in the form of CBBTC and all of their customers that interact with Coinbase, the app. If those folks are able to move on chain, that is going to massively level up Base, Ethereum, the Superchain, and just the crypto ecosystem more broadly. To help them do that, we need to be trusted and scalable. I think those are sort of like key components of Coinbase looking at any infrastructure, and making it work. We need to be customizable. Those enterprises, Coinbase, as well as many others, have very specific needs to move their customers on chain. And then finally, we have to be the best on-chain UX. No one is willing to, force their users in this day and age to go through some crappy app experience, clicking 15 buttons, waiting 12 seconds, whatever it might be, to bring them onto a new product. And so if we can provide the best, some sort of on-chain UX that again is as good as any other app you might interact with, we think those are sort of the three key pillars needed for these folks to adopt an L2 and adopt the OP stack.
If we talk about adopting the L2, we also need to touch upon the token itself. What is the role of the OP token inside the entire ecosystem?
We think we would like to build up a flywheel that ultimately culminates in the OP token coming back to new builders. We talked about this a little bit earlier in the form of grants and retro funding to help accelerate them building in the superchain. So just to paint this picture for a second, what is the superchain? The superchain is a growing collection of L2s that contribute revenue back. That I guess first off run on the OP stack. That's sort of critical, and two, contribute revenue back to the Optimism collective. That revenue funds OP Labs as one of many contributors to the OP stack, but more importantly, then goes back to developers and folks building in the superchain in the form of retro funding, developer grants, etc. And so there's this very clear flywheel of the more activity that happens on chains in the superchain, the more revenue they collect in the form of transaction fees. That revenue comes to the collective. It then goes back to folks building there to accelerate, more revenue. And so this flywheel is still very much in its early days, but there are some massive successes from grants and folks that received grants early and have built up large businesses in the superchain and retro funding. And it's something that we hope to just continue to invest in and hone. We're still learning like the right ways to make this most effective as we go forward.
I mean, ultimately, it's all about the team that are building the actual tech. So if something is not going as smooth as it should be, then probably the team will find a way to make it work. So in that sense, if we talk about the token or if we talk about activity, we have been touching upon developers and all those things. But if you would like to be an investor into the OP token, or if you want to become active on that side of things, what is OP doing for investors, or how can you attract investors into the ecosystem?
There's a number of ways that investors can get, or maybe token holders can get utility if that's specifically what they're looking for. You can, like the OP token today is a governance token. So you, as a token holder, get rights to vote on various measures. Some of those are protocol upgrades. Others, though, are like how we actually spend the token with regards to grants and retro funding. So that is voted on by token holders to direct it in various flavors. And then token holders elect councils of folks that will come in and make much more specific decisions for how that capital gets allocated. So one way as an investor, you could think about this, becoming a token holder allows you to participate in this system. So if you said, hey, there's not enough, of this type of app in the super chain, and I would like to change that, you could absolutely get involved in governance and advocate and vote for OP capital, flowing in that direction to enable that sort of growth. That's the most specific way. long term, the way we think of ourselves is fundamentally like we are an infrastructure company. We provide infrastructure to Coinbase for Base and to Kraken for Ink and to Sony for Sonium. And so really like I'm not sure that we're trying to stand so much on our own as we are trying to be successful through our partners. I think at some point we want a lot of what the OP stack is to just fade into the background. But for the largest brands, the largest apps to be running on this infrastructure, I think we have this use case today with Base. And we're optimistic that many others, World Chain, Inc., again, Sony, Unichain, are going to follow that example, and then many more enterprises will follow them and build large on-chain ecosystems on top of the OP stack.
I mean, I think overall, if I give my sort of view on how Optimism is doing, it's not really out in the open what you guys are actually building. It's more at the back end of Web3, I would say, where others are more the front end or try to say that they are the front end. But I think this is giving some good insights. But I wanted to ask, like, what is more difficult, building a token model that works or building tech?
I think they're both incredibly difficult, and we are years away from solving either. In some senses, this is why we have multiple companies in the Optimism Collective, because these problem domains are quite separate from each other, quite different,
Uh-huh.
and both incredibly difficult. So the Optimism Foundation very much thinks about the token economy and that flywheel I was just describing every single day. OP Labs thinks about how do we build the best infrastructure to support our partners and help bring more enterprises on chain. Other folks think about, how do I build the best DEX in the Superchain, or how do I build, the best interoperability layer, things like that. So each incredibly hard. I don't know that I can claim to be an expert across any of these, but today trying to help on the infrastructure side.
Well, there's no token that has proven to be the correct one. Maybe Bitcoin and stablecoins are actually proven to be somewhat correct, but even Ethereum has been building a new way of making it more efficient and better. I wanted to quote you. I know that we have touched this earlier, but it resonates with me as I've been saying it for a few years now, which is you mentioned before in a different podcast, a user will be saying, I don't know what chain the app is on. I don't know where my assets are. Ultimately, nobody understands the cloud server or HTTP, but everybody uses internet, and the same goes for blockchain in the years to come. Now, you have mentioned how you're going to provide the OP stack for developers, but how are we going to onboard the next billion or 2 billion users within Web3?
I don't know. I don't have that, that particular use case, so to speak. And I get to say that somewhat facetiously, sort of as like the infrastructure, builder. A couple things I'm totally confident in. I'm totally confident that crypto technology, digital self-sovereignty, on-chain finance, et cetera, provide the building blocks to provide useful applications and services to our entire society. And I think that so much of it has just like really yet to be realized. We have a lot of fun speculating on chain, but the core components here, I think, are just obvious to everyone that it is going to change how folks interact online forever. And so I have no doubt that like the foundation is there to scale to the next, billion plus folks. Um, the second is I definitely think the experience of being on chain is rapidly changing and is finally approaching sort of the efficient frontier of just internet application experience generally. Um, Again, if you go interact with the base app, it feels like any other app on your phone. You don't worry about a seed phrase. You don't have to wait, again, when you click something, you don't have to click approve and then sign, as you often do, to authorize a token and then swap it. Um, Maybe we just put up with these things for way too long because we all just believed in this technology, or it was just so fun to be a part of it. But I think folks that are not early adopters that maybe don't understand like what the technology itself provides to the internet and to our society, they're simply unwilling to deal with that sort of experience. And so we talk a lot about meeting folks where they are. Our job as infrastructure builders is to give developers the tools and infrastructure that responds and feels like Web 2 infrastructure. If we can do that, we know we're doing our part to enable the really creative folks out there to build that next use case to bring folks on chain. My perspective is we're pretty much finally there on the infrastructure side. There's still work to do, obviously, and there will always be work to do as we then scale this to billions of users. So we're probably in the later stage innings of when this massive on-chain movement and adoption is going to happen, because finally the app experiences can be just as good as anywhere else.
I think, well, I mean, with the fact that the government in the US is changing so much, you get some sort of other governments stepping in with the same progressive view, and then entities are stepping in after BlackRock has actually filed the ETF, the Biddle Fund. You see a lot of flow coming into the ecosystem. And the first real use case is basically just stablecoins, which used to be a use case in 2020 and 2019. It didn't change. It just got a bigger platform to work on. Is that going to be the first bridge between traditional finance and crypto, that people are going to say, yeah, I would like to use stablecoins instead of fiat currencies, where someone else is going to say yes or no for my transfer?
Stablecoins are just so much better than the
Yeah.
status quo. I think we've all dealt with this. You try to send a wire, you try to send money internationally. It's a huge pain, and it feels sort of like different every time, which is somewhat bizarre. Um, in the US, like we have Venmo, other folks have similar apps. In some ways, day-to-day stuff feels solved. But again, you run into these instances where very clearly it's not. And I think stablecoins are just an obvious 10x improvement there for a lot of use cases that are quite challenging. Um, Crypto infrastructure is just it is objectively, I think, 10x better, to use that phrasing, than a lot of existing financial infrastructure. So US equity markets, they trade 8.5 hours a day. I don't know exactly how long it is, 5 days a week.
Hmm.
Crypto markets run 24/7. And that's sort of just like out of the box, right? And so that is very clearly a better way for instruments to be priced, and for folks to engage with markets. And so what's really nice about stablecoins is you now have this regulatory clarity. It's a very simple use case. It's not something that has all the baggage of regulations that have to happen around, say, investing, et cetera. So it does feel like that is a bit more of the pull that's going to bring a lot of financial institutions into crypto. I certainly think on the backs too of the Genius Act passing last week, that clarity exists. Hopefully, clarity will also pass in a couple weeks to add that for um, other market participants. Um, so yeah, I think stablecoins absolutely are like the thing that's going to tip folks over. But then when they get here, blockchains just offer such better financial infrastructure broadly that I think we will see many other use cases accelerate quite quickly.
Yeah, I mean, we support a project in South Africa where a lot of immigrants or people from Zimbabwe are working there. And if they want to transfer any funds towards their own country that they come from or towards their family, they need to pay like 20 or 30% of fees to just wire the funds towards that country, which, if we talk about being in 2025, is just ridiculous. Uh, Funny though, Western Union is looking into a stablecoin, which I think is a very smart move for them, as that's probably one of the companies that's going to go away if the stablecoins are going to get bigger. Um, Another question in terms of crypto users, where I think for a long time people have been looking to get a return from an investor perspective. Now we have stablecoins, but what do crypto users actually need right now that they don't know that they need it?
I think for those of us that have been on chain for the last 4 to 5 years, even the last 2 years, really, we've all just gotten accustomed to, I'll keep harping on this UX problem. We've all just gotten accustomed to keeping track of where all of our assets are across many different chains, what it takes to bridge them, move them around, how many times we have to click in a wallet to make that happen, etc. And I think we should think of that as unacceptable. That is just not how we should not have cognitive overhead to interact with applications built on top of blockchains. And yet we've put up with that for a while. So I think that what we don't realize we need is just way better user experience, way less cognitive overhead to get and interact with and move around and do fun things on chain. And I think as that cognitive overhead lowers, as it becomes easier, fewer clicks, less things to worry about, we're naturally just going to do more stuff. If I don't have to go pull out, a ledger every time I want to do something, like that's great. That just saves me a lot of time. I will probably do more of it. What we need is better UX. We're getting close to it. You can finally see bits and pockets where it's like, this is as good as anything else I use on a day-to-day basis. As we have more and more of those experiences, more folks are naturally going to do stuff online or on chain.
I think the entire self-custody topic is going to change over the years. You spoke about ledger, but I mean, the fact that you need to hold your Bitcoin or Ethereum on a USB stick where you need to hold the phrases by yourself is not designed for us as a human being. We'd rather want to give it to a third party, but then still have the custody over it. So I think there a lot of solutions are being built to provide that, which is way more secure than holding it in our own basement or whatever it is. But looking forward for OP or Optimism or your role, I think we spoke about the flywheel, but the second half of the year of 2025 looks like it's going to be a great period of time for anyone in the Web3 space. What is the biggest goal for OP to establish in the coming 6 months?
We have three goals in the next 6 months. One is to help enterprises move on chain. We talked about fintechs, we talked about payments companies, we talked about financial institutions. We believe those segments are sort of most ripe, most ready, most willing to move on chain, especially as we get, more regulatory clarity. So our job is to help them move on chain and hopefully help them move into the superchain. Our second job is just to support our existing partners, I've already talked about. We have some of the largest L2s and blockchains in crypto already building on top of the OP stack in the superchain. We want to supercharge and accelerate their growth by whatever means necessary. Third, we need to ship our version of Interop. We want all of these blockchains to talk to each other. We want to provide more tools for developers to work towards chain abstraction, to build that better UX that I keep talking about. And Interop is a really key component of that. So we're quite focused on that and getting that over the line late 2025, early next year, sometime in there.
Then some final personal questions to make it a little bit more fun. If someone is looking to get into the blockchain ecosystem, which we were also jumping into it in a way earlier phase when there were way less projects, less noise, I would say. What sort of advice would you give someone that is interested into working into the blockchain ecosystem or doing anything if they were to start today?
I think a lot of folks think about getting involved in blockchain or crypto as just like buying some Bitcoin, buying some Ethereum, et cetera. And then, maybe trading various other coins. It's a great way to, it's kind of what you have to do. You have to own these things in some extent to get started. My advice, though, would be get on chain. Do something on chain every single day. There are so many apps available to folks, and moving around, interacting with them, doing stuff on a blockchain, which again, today, like, that you're on a blockchain when you interact with most apps. I think it just helps to sort of ground folks in the technology, understand it better, understand what's possible, and also just level set. Where we're still very early in this trend because you have to go sort of interact with the base layer technology. That would be my simplest advice. It's open and available to anyone. Go do it.
Well, or there's also another one, which I think OP has as well, is joining communities. The fastest way to learn, I guess, is through a community to onboard the next users. Also, if let's assume it's going to happen, which is not really a positive way looking forward, but tomorrow Satoshi wakes up, Ethereum has an exploit, and everything collapses. What would you be doing if blockchain didn't exist?
I think the most interesting industry right now that is not blockchain or crypto is space, and so outer
Oh,
space.
nice. I was hoping to
Um,
not hear AI. That's good.
I mean, yeah, AI also fun, but space to me feels even earlier than that. We
Uh-huh.
have Starship, we've got, a lot of rockets that go to space, all the time, but it feels like almost like 2012, 2013 crypto to just try to use that analogy. It hasn't really hit its moment where it's just like so cheap, so obvious, so easy to get there. And yet it also feels like investable from like a human capital perspective. Like I think folks
Mhm.
can go learn and work. There's so many fun startups building so much cool stuff in the space industry today. I think anyone that is just ready to tinker and learn and be an engineer can probably go find a job in that. And when you think about TAM, in some sense, like the TAM is literally limitless, as we get off planet Earth. And so I think that's an industry that's poised for a ton of growth and a ton of fun.
I remember that back in 2017, friends of mine went to Consensus, and there was a project tokenizing the stars, which back in the day was quite early, but at some point it might become relevant if both of these markets are going to grow.
How are we going to coordinate currency and value from Earth to Mars and, amongst folks in space? I have no idea. I suspect crypto technology is going to be a part of it.
Well, we also need a bridge, I suppose, but I don't know how we're going to do it. But well, thank you very much for being on the show. I really enjoyed the explanation of what OP is doing, why it's relevant, your role, and the future of OP. I think you mentioned it before, the website, if people want to get connected with Optimism, but also where can people find you or OP if they want to learn more?
Yeah, optimism.io is the right place to start, whether you're someone looking for a grant, someone looking to run a chain, head there. We are Optimism on Twitter. I'm Sam McIngvale on Twitter, or X these days, I guess. Follow us there for lots of fun L2 news and updates and our views on the world.
Thank you very much. And all the links will be in the description as well. So if you would like to get connected with Sam or with Optimism, go through to the links in the description. Well, again, thank you very much. I would love to have you on the show in a year to talk about all the things that have been happening and the progress that OP has been done. So thank you and good luck on the journey with Optimism.
Thanks so much, Michael. Look forward to future conversations. Take care.